Hello everyone, and welcome to the Financial Endeavors channel. I wanted to make this video to discuss some of the advantages and disadvantages to using margin. I also wanted to discuss some common misconceptions to using margin and my personal mindset on using it. First off, I want to note that I am not a financial advisor, and that you should not take what I'm about to explain as financial advice. Please seek out a certified financial planner if you wish to seek financial advice, and as always, do your own research. I also wanted to caution investors who are just now learning about investing on margin, as this can be a highly risky investment tactic that can either create great reward or great loss. If you are a beginner investor, I would actually recommend against using margin since the risk can be very high. However, just because there is a high risk for using margin, that doesn't mean that it cannot be utilized effectively or responsibly. So to the more seasoned investors watching this video, just hear me out and let me walk you through my thinking process of my experience utilizing margin. Margin can be a great vehicle to invest when funds aren't readily available and when the risk-reward ratio is in your favor. Take for example my experience with Tesla. When the market had oversold the stock significantly back in 2019 and brought down the valuation of Tesla to extremely low numbers, at the time I did not have cash set on the sidelines to deploy into the stock. However, I was able to purchase shares as the stock was going down to its lows on margin. This, for many investors, is extremely risky since by using margin you are essentially taking out debt to purchase shares and are expected to repay back this loan at the time you sell those shares. So this can either be very beneficial or very dangerous. Over the course of Tesla's decline, I slowly added shares with small purchases. This helped me get such a low cost basis in the end whenever I built out my position. If I were to have fully built out my position, I may have ended up bag holding the stock if it continued to decline. This, however, wasn't the case, but it can be a real possibility whenever you're purchasing shares as they're declining really fast. This could have brought me a lot of fear and anxiety as time passed, and I also wouldn't have been able to lower my cost basis due to me not having any available cash on the sidelines. I could have purchased more shares with margin, but I would have ended up over leveraging myself. This leads to the biggest mistake investors do with using margin. Over leveraging can be detrimental to investors who want to be too greedy. Alright, so let's take a look at how I built out my position in Tesla. So back in 2018, Tesla was trading around $350 per share. And if you look at it where it's now, it's doubled that. But I was able to get a cost basis even lower due to utilizing margin as the stock was going down. So I was able to build out my position at around $221 per share. And with this decline that you see this period, I think it was about a 3-month period, 3 to 4 month period, as it was declining, I didn't have any cash set aside. So if I were to not invest, I would have missed out on this opportunity right here to invest in Tesla at 52 multi-year lows. The stock went down to $185 per share, and since I didn't have any cash to invest, it would have been a major opportunity cost. But as the stock was going down, I slowly invested using margin just with small purchases and was able to ride it back up all the way up to $760 per share. I believe I sold around $750 per share. I sold about half my position and still have half of it left remaining in my brokerage account right now. But if I wasn't able to invest during this time period, I most likely would have missed the boat on this appreciation in Tesla stock price. Just so you guys can get a good look at my cost basis, I'm going to show you a screenshot of all the trades I made for Tesla during that March 2019 time period. So as you can see right here, March 20th, I first purchased 5 shares of Tesla around $1,300, so small purchase. I sold that, stock was falling down pretty rapidly, so I didn't want to load the boat per se and purchase all the shares at once. April 4th, purchased another 7 shares, which is about $1,800. May 2nd, a month later, stock declined to $245, purchased another $2,000 worth of shares. May 13th, stock's at $226, purchased another $2,000 worth of shares. May 15th is at $229, purchased another $2,000 worth of shares. May 17th is at $218 and purchased an additional $2,000 of shares. And then at May 22nd, when the stock was pretty much near bottom, purchased about $769 at that share price. Probably could have put in a little bit more, but I guess I figured the stock was going to continue to decline. But I got in at a good price, and this is just a screenshot of the shares that I actually liquidated. As you can see, there's a liquidation date and the gain. So I actually still have shares in my brokerage account that I purchased during this time. I'll show you a screenshot of those as well. So this next screenshot is the trades that are still in my brokerage account today. So May 22nd, at $192 per share, I purchased $1,100 worth of Tesla stock. June 11th, at $217 per share, purchased $1,700 worth of shares. Same day, $217 was just split, purchased $8,000. So I kind of started to notice that the stock was going back up in price and was starting to be fairly valued again. So I kind of loaded the boat per se on this purchase a little bit. Not too much. I didn't go overly crazy. And then the last trade was recently that wasn't purchased on margin. Utilizing margin can be a very lucrative vehicle. However, investing on margin should be used within moderation. By investing in strong companies with good fundamentals at a time of weakness and with the intention of investing for the long term, it can be a good strategy. Dollar cost averaging in the declining stock will better build your cost basis over time and will not trap you into bag holding a stock if you were to put all your money into shares at once. When using margin, you need to know your limit and start to repay back the margin debt balances that have accumulated into your brokerage account. This will limit the amount of interest that you will have to pay over time. Margin becomes extremely dangerous once you have very high margin debt and have to pay interest on the loan, and can be even worse if the stock continues to decline. This will eventually lead to what's called a margin call, where the brokerage firm contacts you to provide more capital by a certain time, usually within 24 hours, or risks the event of your shares being sold to cover your losses. Some may say that investing on margin is not worth it since most of your profits will be eaten up by the interest accrued from carrying a margin balance. This is true, but another way to look at it is that you are still earning a return nonetheless. For example, if I were to not invest in Tesla during the time the stock was falling down to $200 per share, I would have not been able to make the amazing returns that I did when the stock shot back up. I would have incurred a major opportunity cost on my money if I were only relying on the funds that I had readily available. Yes, I did incur interest on that investment, however, it was minuscule in comparison to the return I made on that investment. My margin debt repayments only incurred about $800 of interest, and my return was around $30,000. The margin lending rate currently on most brokerage accounts is extremely low. With my brokerage account, they are only charging 7.5%. This is extremely low interest that you can use for a loan towards your investments. Most personal loans that you can get at conventional banks would be around 11% interest, and it depends on how much you're asking for the loan and the loan repayment period. With margin, you only have to pay interest and not the principal of the loan. There is no time limit to paying off the margin debt, which is why you only pay interest payments on that loan. The strategy to using margin is to use it towards very strong fundamental companies
and to always invest with a long-term mindset and within moderation. I'm not saying to not carry cash in your portfolio, but during these extremely volatile times, while you may want to keep cash on the sidelines, you'll also see companies that are trading at ridiculous valuations that will end up creating you an opportunity cost in the end.
You wouldn't make any kind of return otherwise.
And would incur a major opportunity cost if you did not invest. And I understand that this type of investing style is not without its flaws, but it's a strategy that has made me a lot of money recently due to individual stock weaknesses and recent market conditions and events that have made the market drop so significantly. Obviously, I'm not suggesting you to over leverage your investments with margin. That would not be beneficial. However, in my entire time, I've only put in about 30% of additional margin capital into my portfolio. So I run less of a risk of having that margin call. But there's many other investors that over leverage their accounts by leveraging 70% of additional margin. So this will effectively expose them to 170% to the market. And as you can probably imagine, whenever you're leveraged that way, over leveraged that way, if your investments go down by just a little bit, you're going to be, facing the concern of a margin call likely happening. So
Please let me know what you guys think about this strategy in the comment section below. This is actually my first YouTube video on this channel, and I decided to start making these videos due to the unprecedented market conditions that we've been in recently. And I just enjoy talking about finances and investments, and want to help people out there, because right now is a very significant time and an important time, and can lead to some great investment opportunities for the future. But if you guys don't mind, just leave a like to this video if you guys enjoyed or found it informational. And also subscribe. I'm definitely going to be doing more videos, hopefully 3 or 4 times a week. But anyways, thank you for watching, and I'll see you all next time.